Hello, and welcome to the Argyle Financial Controller Leadership Forum. Predict, plan, prepare. My name is Nick with Argyle, and it's great to have everyone joining us today. A couple of notes before I turn things over to our panel moderator. First, a quick reminder to stop by our sponsors' virtual booths at any time during today's event and for the following week. Our partners are committed to providing you with valuable content and a great overall experience. At any time during today's event, you can visit their virtual booths from the main agenda page, which include complimentary materials, information, and meet and greet opportunities. Throughout today's event, you will also have the opportunity to win one of several prizes. So be sure to check out the prizes and raffle rules tab of the interface to see how you can earn points. For those seeking CPE credit today, you must answer at least 3 polling questions and remain on the session for its duration. Polls can be found under the Polls tab on the right-hand side of your console next to Chat. Afterwards, if you're eligible to receive credit, you will receive an email with a link to your certificates. If you have any questions on credits, please email cpe@argyleforum.com. To ask questions throughout the session, simply type into the Q&A chat, and we will address your questions at the end of the session. Now, without further delay, I would like to introduce our moderator, Swetha T. Pai, Chief Financial Officer, VCM Products. We're super excited to have Swetha and our panelists for a panel discussion titled Evolution of the Financial Controller. Welcome, Swetha. Over to you.
All right. Thank you, Nick. Hi, everyone. I'm Swetha Pai. I'm honored to be moderating today's discussion on the evolution of the financial controller. As a quick intro, over the past 20 plus years, my career has spanned a range of financial leadership role across a variety of different industries. I've worked in investment banking, corporate strategy, FP&A. I've worked on complex M&A transactions, as well as leading FP&A teams globally for large multinationals, as well as worked in small startups as CFO for them, doing fundraising, etc. So throughout my career, what I've seen is I've witnessed how the controller role has really transformed. And I'm excited to talk about what this looks like for the future and discuss this more with our esteemed panelists here. So let me just turn it over to them and kind of let them talk about their unique perspective and experience and let them introduce themselves. So let's start with Julian. Julian, do you mind introducing yourself and sharing a quick overview of your experience and how it connects with today's theme?
Thank you, Swetha. Appreciate that. Hello, everyone. I'm Julian Sifliku. I'm the current financial controller for Kroger Company here in Michigan. Very, very excited, along with my fellow panelists here, to be in this, panel discussion, and also to participate in this great audience that we have as well. A little bit about me. All my career has been in retail. I started selling seafood as a seafood clerk, and then I moved into management for about 10 plus years. Was a store leader, and then had some roles within, the executive team, either operation or merchandising, and then moved into finance, starting early finance as a financial analyst, and then assistant controller, CFO in different states throughout the U.S. So as you can see from my introduction here, very, very, a great experience on how you move up into finance role in your organization, and have a passion for numbers, a passion for people, and looking forward to this great discussion we're going to have today. Thank you. I think I would move it all to Phil, right, Philip?
Yep.
Yeah, Julian, thank you. So I'm Philip Peck. I'm currently Vice President of Advisory Services and Finance Transformation for Peloton Consulting Group. Our company helps organizations drive digital transformation across their enterprise. We do advisory work, which I'm typically involved in, pure consulting work, and also managed services work across an array of different technology platforms and related business process improvement areas. For me personally, I've spent 35 plus years in FP&A, in finance and controllership in a variety of different corporate roles. I've led FP&A functions. I've been a business controller. I've been a financial controller. Like you, Shweta, I did some M&A work way back in the day. And then I pivoted into consulting. So helping organizations in large part explore the art of the possible, adopt leading edge practices across FP&A, finance, and controllership functions. Really looking forward to the discussion because I know we've got just a tremendous group of peoples here that we're going to share hopefully lots of insights and wisdom for all of you in the audience.
Great. Thanks, Philip. Next is Dan Miller.
Hi, everyone. Dan Miller. I guess I'm the tech guy. I spent my entire career in technology out in Silicon Valley and then really in a variety of stages like Shweta. Currently CFO of RightRev, which is a technology that completes the process of complex revenue recognition and lease accounting. But I've also done much larger companies. I was vice president of finance at NetSuite, a cloud ERP company, and then also CFO of Nexon, which is about a $500 million company located in San Francisco, energy software and services. And then was also vice president and controller for a very large networking company, big IPO, et cetera. And hopefully those sort of multi-stage experiences kind of will hopefully contribute a bit to the discussion. Look forward to it.
Yeah, great. Thanks, Dan. And last but not least, Samantha Singer.
Hi. Yeah, I'm Samantha Singer. My background, like most people on the panel, comes originally from accounting. So I did public practice for about 8 years. And then I transitioned into the role of a controller, director of finance in both the restoration and hospitality industry. And I've been doing that for about 13 years. Right now, I'm currently working for a company called Levy Canada. We're actually an international company under the umbrella of Compass, and we provide our premium food and beverage services to our NHL hockey team in Montreal. So that's where I'm at right now. And I have vast experience in different types of hospitality and restaurants. So I'm the food and beverage girl.
Perfect. Great experience across the board. So let's get started. So to start the discussion, just broadly, want to ask the panel to talk about how they've balanced or how they've seen controllers really balance kind of the traditional roles with new responsibilities as we have more technology, data-driven responsibilities coming on the board as far as what comes within the controllership function, where controllers are no longer just focused on maintaining accurate financial reporting and compliance. They're asked to do a lot more and even kind of go and really partner with FP&A. So how have you seen this work effectively, this balance of traditional roles for controllers as well as these new responsibilities, especially given the technology that has been coming on stream? I'll start with you, Julian, if you can provide some real world examples, any thoughts, etc.
Thank you, Shweta. That's exactly as you said. The world is evolving, it's changing. And the controller role that was like 5 years ago, as a matter of fact, and I can do it like pre-COVID and after COVID because a lot of things changed. It's completely different nowadays. Before, I remember myself when I started as a financial analyst, doing a lot of entries, a lot of manual entries, and trying to do a lot of reporting myself and with my teams as well, putting a lot of data in. Fast forward. You move into a controller role, especially with the new landscape right now, either micro or micro, economic changes that we have. We are facing to a lot of data that's coming in our way and how to manage that. And technology is far more advanced now. Okay, that was before. As an example, in my unit here, we use a lot the Power BI. I'm pretty sure a lot of people from the audience have knowledge about Power BI. Which you have a lot of reporting out there from different data from different sources that you can use. Okay, so instead of before we used to spend hours and hours not just creating the reporting, but extracting that to use for our roles. Now you have it ready. The key here is how strategic you are, okay, based on what you're trying to do now. As an example, you take, for example, if I want to build, I want to build a model that's going to show me what, this unit, how that is going to perform in 2 or 3 years from now. Strategically, I have to consider in the reporting a lot of data, external data first, economic, what kind of landscaping we have as far as changes in regulation, government. It's one thing. The other piece is what is the change in population? What is the need of the customer? Okay, and then you have the internal data. You look at the history. You have a look-alike scenarios. And trying to build that. So, in other words, right now it's fundamental. It's very important that controllers right now develop that strategic mentality, not just entry manual. Yeah, that's a different story. Now, strategic, you got to think ahead. What do I stay in the project in short term? How about long term? How you can get executive teams, okay, within. In the to kind of, I would say a phrase, dance along with the project, so they understand. So every team understands that. So I think bottom line is you got to think strategically.
Could I add to that a little bit?
Absolutely. Please.
That's a great point. And actually, what the word I sort of use, we're going to get into talent later, is really curiosity. Really, I mean, you have to be curious about how the customer buys. And what happens is, because we've all been there, is you're so busy doing your job, do you really have time to go spend time with the sales force or the sales team or the marketing team or whatever, distribution, whatever it is? No, but you have to find the time, and then you can then therefore have that dimensionality on the business to be strategic. And I think Julian's answer is great. I think the how is what I spend time with the people that I manage is, how do you carve out the time to actually go build those relationships and get that knowledge so that you have that dimensionality?
Yeah. No, that's
Dan, I've got to pick up a cue there. The freeing up the capacity and the bandwidth such that our teams can add value, add insights, drive better decision making, raise the financial aptitude of the entire organization. There's almost some preconditions. So what has to happen first? I sat in a meeting with a client recently, and the CFO said, I want my people helping to manage the business, not manage the numbers. They would come to the meetings and everyone would have a different answer. So you'd have someone over here going, oh, well, we made some updates to the actuals and we had to do a plug. We did some top sides and it's 100, not 95. The entire analysis over here, which was more from the FP&A side buried in the business, they said, well, all our analysis came to 95. They would end up arguing over the 5 versus, it's somewhat of a trivialized example, but those are all predecessors to being able to elevate ourselves to a strategic role.
Yeah.
Right. No, that's a great, those are great examples. And yeah, the strategic role is really important. And that ties in really well with kind of the next question I wanted to explore with you guys, which is around collaboration with CFOs. So what are the, as we're talking about strategic insights and controllers are no longer just kind of scorekeepers, they're expected to work together with the rest of finance teams, the operations, the business side, and provide strategic insights. What are some of the kind of tips, tricks on how financial controllers can truly collaborate more effectively with CFOs and with other business partners to ensure that these insights are great? And Dan, you kind of touched on this, on creativity, on curiosity. Creativity is potentially another one. I would love to hear from you guys on what are some other ways that financial controllers can collaborate with CFOs and in order to provide that strategic insight. Philip, I'll start with you, and then maybe Samantha, you can jump in.
Sure. And I'm going to weave in a couple explicit examples because it popped into my mind this morning as I was thinking about, preparing for this panel discussion. One is, for me, establishing some clarity around roles and responsibilities. The evolution of the controller, as we're all clearly highlighting and amplifying, it's different than it was. But then you still have someone who's over here in FP&A, or someone who's here in treasury, or someone who's here in operational finance. Clarity in support of the CFO and the mission and strategic objectives. We all collaborate. We have to collaborate in a cross-functional way, but we don't want to step on each other's toes. We shouldn't be doing the same things. We should be leveraging the better business processes based on best practices, the tools and technology, the emerging concepts. So me, first and foremost, clarity of the roles and responsibilities, and then how we support the CFO and the broader Office of Finance. Along with that is kind of aligning on those ultimate strategic goals are, hey, in our function, on our teams, we've got some kind of North Star objectives. We want to elevate the financial aptitude of the organization. We want to help them make better decisions. To do that, though, there's probably some other things: streamlining, automating, leverage technology wherever we can, make the process of generating financial and management reporting seamless, push button, turnkey, self-service, all of those different elements. Along with that, then, is we all know at the beginning, it's the data governance, data quality, getting out of the tyranny of spreadsheets, which a lot of us still live in. Not necessarily bad, but there's often a much, much better way, such that we're delivering accurate, governed data and stewardship around that data. The curiosity, certainly, as Dan clearly highlighted, is essential, but there's the element of the communication, the storytelling. Often the controllership function, they have unique insights around the way the end-to-end value chain of the business works. They have inherent knowledge that is just so powerful that can be better leveraged in the organization. An example that comes to mind is having worked in life sciences, an organization who had commercialized products. So they're heavily, heavily focused on gross to net revenue accounting and dealing with all the different providers and the government regulations, but they still have early stage products and things that are flipping over to commercial phase soon. That controllership function, we're responsible for all the arcane, complex, mysterious accounting at times, but that was essential on a go forward basis to understand forward-looking forecasts and direction of the firm. So how do you tap into that groundswell of information and insights that the world of the controllership has? Not the accounting side, but the forward-looking planning, decision-making, and analytics side.
Yeah, that's a great point. I mean, communication is always key. It's, communication as well as kind of being comfortable with iteration, by including the controllership function, right? Like, so you use them as an input, I think, in those strategic discussions. Those are key. That's a great point, Philip. Samantha, did you have anything to add to that?
I mean, everything Philip said is were things I would have to agree with, and things that I was thinking about saying. And I think a lot of it is also just cultivating amongst your team a strategic mindset. So I think in the past, our roles as controllers were really looking at the data and kind of trying to put it together in a very methodological way. Whereas now, I think as a controller should be taking on a more strategic mindset, understanding really the trends of the business, the competitive positioning, things like that. And by doing so, also sharing that with the team that is in your controllership. I personally benefited from taking some courses in emotional intelligence to better communicate and align with my CFO to see if we can work together and really have him bring me into those conversations about business development and growth like that. And also I found that by being very proactive with risk management was also very helpful in this way. Controllers have the ability to have a little bit of insight into what the risks are and where they're coming from and how to mitigate them. And by being proactive and bringing that forward in those meetings and in those conversations, that's also a very good tool to use while working with your CFO.
Yeah. Can I just build on that? Just sort of I didn't take a class in emotional intelligence, but if you want to make friends with the CFO, help your business be predictable. And that is obviously something we all deal with, whether it's accruals or just visibility in general across. And that is getting back into that curiosity thing. And then, Philip said something which I think CFOs struggle with a little bit, which is sort of the say-do thing. They're saying, come with insights. We don't want to talk about data. We don't want to argue about numbers, but they don't. But we don't invest in systems and automation because budgets are tight for G&A versus we obviously want to put the money elsewhere in the business. And I see this just on the RevRec side, particular, just because everybody, accountants love spreadsheets just because they like to see it all flow through. There's no greater visibility of anything like that than the RevRec area. And we see businesses making that leap and it helps a lot. But really those insights around the automation and the systems to actually allow you to have those conversations versus, and this is what you do, Philip, all day long, is that automation for the digital transformation is critical so that you improve decision making.
So another thing I want to add, because everybody said, nail it. One thing is for all the controllers or financial analysts in the audience or whoever is listening, be brave. Be brave. Knock on the door of CFOs, as Dan said. You have to build that bridge. You have to build a conversation. I've been on both sides, so meaning I'm waiting for the opportunity for my, whoever is a financial analyst to come to me and say, Julian, you know what? I want to take a chance to develop a long range plan. What are the pieces? Okay, how that is built? What are the components? Who I need to talk to? Okay, so and then I say, wow, that's great. Here it is. I can help you, along with that plan. And please let me know what I need to do in addition to. So you kind of manage that. You prepare that the next CFO coming. But it is going to take, it's going to start with us. It's going to start with financial analysts. It's going to start with, assistant controller, whatever it might be, in order to become the next CFO.
Yeah. And you guys all touched on some key kind of changing, activities and roles for the controller, such as risk management, Samantha, that you touched on, and Dan, you talked about automation, et cetera. As these kind of roles become more necessary, the risk management plays a bigger part of controllership's again, purview, and automation becomes much more on stream, and it's required for data analysis, and that digital transformation happens at a much more broader scale. What can controllers do to best prepare for this? How can they? What are kind of best practices that you guys have seen that can help them manage kind of the automation and the new technologies while also maintaining that risk management? Because again, one of the main reasons why Excel will be pried out of my cold dead hands is because I can trust it. It's a steady, it's something that I know it's stable. And that stability is key. How do you manage that in a dynamic world where controllership is often that steady hand, right? FP&A can kind of do new things, and business development, corp dev can do a lot of, and strategic corp strategy can do a lot of fun things, but the person kind of really holding things steady is controllership. So how do you manage when things are so dynamic? How can controllership or controllers manage this kind of dichotomy that exists? And Dan, I'll start with you, and then maybe we can have other people pitch in.
So I think this is visibility for the financial controller in terms of really thinking about what management's doing. To me, that this is only unfortunately part of the overall operating system for a company, the operating mechanisms it has around how are they delivering on the sales side, how are they delivering on the marketing side, et cetera, whether there are strategic objectives, OKRs, whatever the acronym you're using or approach you're using. And so I think this fits within there. Because let's face it, I think we all learned from a few years ago. We think we know what risk management is. It fits in a box. We list these things out, and then there are a whole bunch of things outside the box that we didn't ever think about, whether they're business specific risks, global risks, compliance risks, and on and on and on. And I do think it really does, unfortunately, kind of go back to the same thing, which is how closely are you integrated overall with the business as the financial controller? How do you fit in with that overall operating system? And then to your point, maybe specifically, Shweta, and I'm just because I see it a lot in our travels today, which is since you mentioned the spreadsheet, it is the cold dead hand thing. We see it all day long, and it's just how we work. But when the mistakes occur, and you end up having compliance risks or audit problems or what have you, then what happens is people start to say there has to be a better way. We have to evolve as our business and with our approach. But I think overall that risk management approach has to fit into an overall operating system, because let's face it, at the end of the day, we're the numbers folks, and we got to get that right. But there has to be a broader system for us to fit into and plug in.
Yeah. That's a great point. Anybody want to jump in?
Yeah,
Samantha,
I can add real
Julian?
quick here. Dan, I love everything you said. It's exactly right. As far as control the piece. I can add one thing here is the key here is, as a financial controller or a CFO or whatever that might be in the finance team, it's important to keep the team, very, very informed of anything that changes, anything that updates. As an example, tomorrow I learned that, I need to change some material impacts that happen. So I need to, net that with some, instead of expense, net it to any revenue it might have. So how do you do that? Again, you have to keep, if that involves merchandising, involves operation, might involve HR, or it's going to be, maybe a warehouse thing, has to bring the team along and discuss that, communicate that, just-in-time talking, just-in-time communication. Don't let that go down the road without any discussion, because it's going to be very, very dangerous.
I'm going to jump in just on what Julian is saying about communication. I think something that's very important in our new kind of development of our roles is the cross-team communication. Like he was saying, it's something that we as controllers, or people may have perceived controllers in the past as people who stay in their offices, heads down in the numbers. And it's very important now that we are flexible and embracing change, and that we can adapt to the changes, and that we can be malleable with those things, and then also involving those cross-team communications that maybe in the past we wouldn't have had, and having those open, dynamic conversations about what our role is within the organization as well, and what we bring to them and what they bring to us. It's like a two-way street, and sometimes we as controllers forget that we need to kind of really embody and embrace all the other teams that we work with.
Yeah, no, that's a great point. Fostering innovation, fostering all that. And that kind of brings me to another question is how do we think about the fostering innovation and building a culture, especially when it comes to talent development and making sure that, we have a dearth of talent in this kind of a function. You can never find enough, especially accountants, and especially in the controllership. So given that kind of talent development, team development, landscape, what are some of the tips and tricks that you guys have found, and how can finance leaders really, attract the right people here and build that culture for innovation, agile, strategic thinking, etc. And Samantha, I'll just turn it back to you, and then as you guys can jump in, Philip,
Sure.
others as we continue.
Yeah. So a big thing that I focus on is developing for example, my assistant controller. I think it's also about breaking that narrative of what a controllership position really is all about now, and that involving your accounting team in understanding the business as a whole, I think, has a huge impact on talent and letting them understand how we impact the business. I know a lot of times it's the sales teams that get a lot of the credit, or the revenue generating units that are, the ones who get to see everything and tangibly. However, I think it's very important in order for us to grow as controllers and to have our teams grow, is to really involve them in that. Be open to training and courses and things that might be outside the realm of controllership, but may have an added benefit to them. We do a lot of cross training in my role. That's proven to be very effective. You have people who can pick up and do other people's roles. To me, it's really about breaking down those barriers and breaking down those preconceived notions of what it is to be in an accounting position within the industry, and to really be able to see the fruits of their labor. I find is also very important, because sometimes, we as controllers, our main job is to spit out those financial statements at the end of the month, and in previous times, it was maybe the CFO or the FP&A team that would take that information and share it and tell the story behind it. But now I find that because we're automating so many processes, and because we're growing and we want to develop those skills to analytics and strategic thinking, that we are able to kind of be those people and be the voice of the numbers and tell those stories. And I think that has proven to be, in my experience, that has proven to be very effective in engaging the people on my team, because you feel like you're part of the bigger picture, and you're not just money hands down looking down at the spreadsheets, doing your pivot tables. And I think it's become very, very important in our roles to be able to reach the other teams. Something also we do, and I'm sure others do it too, is that we do like lunch and learns for our other teams who might not have any understanding of finance, or maybe they've never seen a financial statement. So then we kind of show what our role is in a broader capacity as well. And I find that's also been very key of keeping my people engaged on our team.
That's a great point. I love lunch and learn. Philip, did you have anything to add?
Yes,
And then
I
I'll
did.
open it up to
Samantha, you've triggered a whole series of different thoughts in my mind. A couple of years ago, I was helping an organization in academics. They're one of the largest global online institutions in the world. And they had a new COO who was de facto CFO came in, evaluated his talent pool across accounting, across finance. They didn't even call it FP&A. They were the budgets team. And he looked at it and said, this is wrong. This is completely wrong. I need to baseline/rebaseline. So it started with, what am I/we looking for in the roles of all these different people? So establish first, what's the idealized state, and then evaluate all the individuals across these different criteria and say, do they have the aptitude? Do they have the attitude? Do they have the curiosity? Because we need to be way up here, like a top quartile. We're not there today. And not that the people can't do it. They haven't been trained. They haven't been given the opportunities. They lived in their silos. You can keep going and keep going, where fast forward, they've completely transformed the totality of finance. And specifically things like controlling, they're different now. They're actually business partners. They're working very closely with academic affairs, marketing, the other constituents across the university to drive change. And certain people have thrived in that environment. Others take longer because it's hard. Change is hard. You're learning new skills. It's different. It's not, we're never suggesting it's easy, but when you avail them of the opportunities, human beings tend to like new things. Change can be hard, but give them the opportunities, give them the training, give them the tools, and they can be very successful.
Can I just on the change thing, that is so I think we're all seeing this, whether it's from AI or from whatever the driver is. You see it in even in retail. Is business models are changing, they're evolving, they're getting more complex, not less complex. And so besides just the base sort of ability, we're all sort of looking for that, of course. The word I would use is agility. And that is somebody who is really, I'll actually say myself, when I was in that controller role, I set everything up, everything was perfect. Don't give me something new. It's exactly the opposite, obviously, today. If you take that approach, you're just done. You really need to be able to evolve and you have to embrace those changes, as you were saying, Philip, and that agility, both intellectually, but also skill-wise, to be able to build I can always say the capability of the organization, whether it's the people or the systems, to be able to support those changes.
That's great. I totally agree. I mean, it's a new way of interacting with the larger organization for sure, and with your own team. What are some of the kind of ways that you guys have found, and this is broad, to measuring and demonstrating the value of controllership function? How do you guys see that evolving, and what are some of the challenges faced, some ideas on how can controllers currently measure and demonstrate the value of their team to the broader organization? How has that kind of evolved from what you've seen? And I'll open it up to whomever, Julian, and then maybe somebody else.
If I may, I can go first. Sorry, team. Great question, and it's so valid nowadays like never before. When I look at those, my team and certain individuals, I look for two characteristics which I develop. I'm keen on developing. The first one is value. Value. What does it mean by that? Is I'm looking, is a value is skills or attitude? I pick the right attitude. Here's why. It's very because I've been in my career, and I have great examples of that. For me, attitude is number one. The reason is because you're willing to participate. You're willing to go outside the box and learn new skills. Okay? And then you raise your hand. You go and say, okay, I'm going to take to these, on this project, because I know that it's not, it doesn't fall under my duties, but I'm willing to go above and beyond because I want to be the next CFO. I want to be the next CEO, whatever might be the case. So the attitude is right. Skills, you can teach skills anytime. Okay. But you got to have the right attitude. The other one, which I think they are equally important, but okay. The other one is trust. Trust is if and I've been in, and I have a lot of examples here in my, I've been in West Coast, as CFO for Kroger, East Coast and all. So what I learned there and what I'm promoting as well is the trust in the way that I'm giving you in a project, right? You got to tell me the truth. Okay. And you got to tell me the truth in a way that not just as you see it, but timely as well. How many times, and controllers or CFOs have been in a situation where, now, oh my God, I have this $2 million that's going to hit me in the next week. And should I tell my CEO or not? That's the difference. You should notify your CEO, your team right away. Either way. If it's a good thing, I'm first. I can go and say, you know what, boss, we got it. $2 million is our way. How about when it's unfavorable? So that's the thing, you build the trust. You build the trust, and then you have that person, you have that team forever glued to you. And this is how that goes.
And that's a great point. And the trust, it goes both ways. And to that point, we actually have a audience question that asks the other the other way is, how can organizations support controllers as they transition into this more strategic role that is much more expanded than they've had in the past? So and that's a great question. So, I just would love to get your thoughts on it. Dan, Philip, do you guys have any ideas?
Can I continue since I am in this?
Oh, yeah, I'm sorry. Quick? Go ahead.
Excellent. I can go the other way now. How they can support. And again, these are live examples too. As a CFO, as a controller, you have to become visible. They got to hear your voice. Try to go around the cubes, try to go around their offices, say good morning, go from the 5th floor to the 4th floor to the 1st floor. Say hi to people, explain the position, explain the situations, okay? Build bonds. And this is how you develop the trust. Because Can you imagine? I have two scenarios here, real quick. I have one person I say good morning every day, or every other day, and I have a person that I see every 6 months. Which one is gonna, serve me most, or have a trust? The first one. So be vocal, be visible, communicate.
Yeah, that's a great point. Communication is key. Anything else to add?
The one thing I'll add is because we have multiple stages of companies here. At some point, the planning side and the actuals come together. And I guess my point, I'm just going to say, when you have the sort of the person who's just dealing with the accounting and not dealing with the planning piece, I think to answer your question, you've got to bring that person's skills along slowly. You cannot just throw them into the fire and suddenly say, I'll just say the extreme example, we're a public company. You're suddenly got to be able to figure all of this stuff out, and we got an earnings release in 6 weeks. So, I think just bringing those people along. But just quickly, what happened? I got thrown into that role, fortunately, for a very early stage company, and developed the skills as the company grew. So it just sort of depends how that happens. But ultimately, that is a very, very, very different skill set. And so mentoring those folks versus just throwing them into the fire.
Yeah, upskilling is key. Upskilling and doing the, all the helping them understand data analytics, strategic planning, what that even entails, I think is key.
Good.
Quick one, because Dan, you called this out earlier. It's the say as I do or do as I say, whatever the dynamic. As an executive leadership team, yes, we're going to invest in the cutting edge technology for customer-facing experiences, how we deliver goods and services, or how we expedite things through our supply chain. And they're like, oh, wow, yeah. Unlimited wants and limited resources. And what gets whacked? The G&A, to your point, the G&A side. Often that can do a disservice to the value prop that controllership and broader finance can bring to bear. Yes, we have to have our ROIs and our value proposition. But once we start demonstrating the value we add, the organizations, it's incumbent upon them to help prioritize and maybe reprioritize potential investments to free up the capacity, the time, invest in automation, invest in technology, such that the controllers can spend time on the value-added insights, inclusive of training, education, opportunities, and so forth.
Yeah, we're, one of the big things is that often finance is seen as a cost center. So, organizations that don't see finance as a cost center and really invest in it are the ones that really get the really big dynamic CFOs. Anything more to add, Samantha?
You just resonates with what you said about the cost center. It's something that I've been, advocating for, that we are a lot more than a cost center finance, right. That if there was no finance, you'd have no strategic business decisions to make and you wouldn't have the data. And I think that's actually a mindset that going forward, companies are going to actually have no choice but to adopt, because we are not just a cost center, and it becomes, increasingly frustrating when people view it that way and don't really involve the controller side of things into the business. So I think for the question what companies can do, I think it's exactly that: upskilling, mentoring, and really allowing the team to feel as though they are part of the integral part of the business and not just that cost center sitting in the basement.
Yeah, exactly. And on that, topic about upskilling and tools and getting new technology, one of the audience questions was related to that. So what tools and technologies have you guys found to be most effective in identifying potential financial risks early and really, help with the controllership functions? Anybody want to take a crack? Julian, Philip, I think, and Dan, Samantha. It's totally up to you guys. Whoever wants to jump in.
I'll let why don't folks do maybe a current situation. I can maybe talk a little bit about where it's going.
Yeah.
Well, I can go ahead as far as the tools that you look at. Technology is most effective in finding potential financial risk early. It's the way. I mean, the way how we build it is you look at, first of all, if you are a public company, you are bound Sarbanes-Oxley. You gotta make sure all the checks and balances you are within the frame there, and you kind of build the tools. As far as effectiveness of the tools, again, it depends. It depends when it goes. So if you're looking for a risk, as far as, let's say you have a risk, you kind of have a store that or a unit that you're trying to build a financial, in 5 years where we're going. The risk is if you put in your model that that place or the surrounding areas will population will increase by 2%. You got to be mindful to that. So you put the tools in place there. You put the checks and balances, making sure that you really are going towards the target. If not, and the whole investment is going to fail. So this is one of the tools that you can. There are other things too, as far as when you're looking with respect to expenses. You think that not the first thing that comes to my mind is like, how do you manage COVID? How do you know what's going to happen? I don't know. So you build like the caution there towards unknowns.
Yeah.
That's great.
Go ahead, Philip, and then I'll go.
Yeah, real quickly, I'd layer that in. Julian, you got me thinking of another client of ours, springboard from COVID, but the reality of today, they're a very large automotive retailer, and they also have a captive finance company. So guess what? We just had a presidential election, and the winds changed, and the wind blows different directions. Interest rates are exceedingly important for them. So they're constantly running scenarios and simulations and getting to the point of saying, let's not just do contingency planning, but let's create an operational playbook. Yeah. If things manifest in a certain way, what will we, the organization, be prepared to do for a more dynamic allocate resources, reallocate resources, in some sense, regardless of the tool we're doing it in, but have the modeling framework and the capacity as an organization to move based on the assumptions and the output and what materializes.
Yeah, that's exactly a perfect lead into this sort of we've all heard of software as a service, and now there's service as a software that's all evolving with these sort of agent-based approaches, agentic, whatever. And just to use Philip's example, right? I mean, we have good process, right? You kind of do a weekly forecast update, you look at probabilities, whatever, you look at trends and all of the math we get good at. We humans are pretty good at these things, but we're doing them in a discrete sort of process, right? And if you start to think about, and I'm sorry to do this, but sort of an AI approach where you're constantly sort of doing, these engines are doing this stuff based upon all of the myriad of inputs, you can start to see a world where it could actually get better. Obviously, humans need to come in and apply judgment, but it is an exciting sort of something that's sort of, I guess I would say, bleeding edge, maybe into cutting edge a little bit right now. But I think that approach, certainly over the next few years, is where, if we had one of these panels in a few years, I actually think some of us would have some of these things implemented.
Yeah, that's a good point. And that leads into a really good audience question here, which is, in the future, as we're evolving and given this financial landscape, what does that ideal relationship between CFOs and controllers look like? And what is it going to evolve to? Samantha, I'll turn it over to you, and then all of you guys can jump in after that.
I think the future really looks at controllership and CFO relationships as two partners who are working together to achieve a common goal. I think by connecting the financial data that controllers put out and having those open conversations and looking at it, I think someone on the panel said, as a business partner relationship with your CFO, that's really where the future is headed. I believe it's going to be a very collaborative relationship, and it has to be a collaborative relationship. And the controller is going to, eventually will have that insight to help the CFO with those plannings and with those forward-thinking projects, or helping bring the business to the next level. I think the future really is a collaborative relationship between the two, and removing those silos of data and strategy and merging them together and working together as a team.
That's a great point. And we have 10 seconds remaining if anybody wants to jump in and say anything.
Real quick here. I don't think it's an ideal situation. I think the thing is that we can go to dinner every other night. No, I'm kidding here. As far as CFO and controller, the truth is telling the same story with different words. So meaning we are on the same page.
Yeah.
Great job, Shweta.
Yeah.
Yep.
Great.
Yeah.
Thank
Yeah.
you.
You were all great. And thank you all for such an insightful panel discussion. And I want to thank everyone else for joining us today. This session, along with all of today's content, will be available on demand following the event. For those of you who earned points throughout today's event, an Argyle team member will be following up with the winners in the next couple of weeks. This officially concludes the Argyle Financial Controller Leadership Forum, Predict, Plan, Prepare. Thank you again for joining us today and engaging in our content. We look forward to seeing you at our next Argyle Digital Finance event soon, which will be our CFO Leadership Forum, Lessons Learned in 2024 on December 17th, 2024. Have a great rest of your day.